didn't pay the amount of taxes. What they can say is they get an unfair advantage for 20 plus some years compared to the other companies that are in Ireland. Because the corporate tax in Ireland is 12.5. The corporate tax in most EU companies or EU countries, sorry, is 20%. And Apple has technically paid less than 1% for since 1980.
So is Ireland's government under fire more so than Apple is?
Right. Yes.
And U.S. government is backing up Apple?
They actually are on this one. Yes.
Against the EU?
Yes, because they do not believe that the EU should be a global tax authority.
Right.
And also, if Apple does pay this, what will happen? Okay, right now they'll pay it. They'll have to. They'll put it in like an escrow account and hold it until it's appealed, which could take 5 years. But what will happen is when they do pay it and you do put an escrow account, then that's a tax break here in the U.S. So we're going to see that hit here in the United States, which obviously is not. Because Apple does pay their taxes that they here in the U.S. and they pay tons of taxes. I mean, last quarter they paid almost $4 billion in taxes alone. So they do pay taxes from the U.S. They just don't pay any on any global profits.
Do you know why Ireland gave them that tax break or that unfair advantage under the table?
Yeah, I mean,
The jobs. Look at Wall
That's
Street.
that's one of the issues they have, that they fear that if they don't appeal this issue, they're going to lose the jobs that Apple provides Ireland with, which is about 6,000 employees that they have in Ireland. So they feel like that's going to be going to set a mandate for multinational companies to not want to go to Ireland, which is such a small country, and they can benefit from having these multinational companies provide this employment.
see, here's the European Union doing essentially. There's 6,000 jobs there. The two companies that kind of went over, ASI and AOI, both have 0 employees. They're just subsidiaries that legally exist but do not exist. I think I read where actually ASI, I take that back, it has 3 employees. All 3 are executives, and all 3 are the board members at Apple Incorporated in California. 2 live in California, 1 lives in Ireland, but they only meet in California. That allows them to use a tax loophole of being managed by a country outside of Ireland, so therefore they don't have to pay taxes.
Can you clarify the Irish law? I mean, you said managed outside Ireland, they don't have to pay taxes within Ireland?
Right.
How does that work precisely? I mean, how do you define managed outside Ireland if the headquarters are located in Ireland?
Right. What they're saying is, essentially, since they have no employees and they own intellectual property in California and Apple Incorporated, and all 3 employees or board members only meet in California, then the company is managed outside their country. So therefore, you're not considered a legal tax resident in that country. You're considered a tax resident in the United States.
So then how are you able to legally claim Ireland as your headquarters?
That's a good question.
It's just a legal entity.
Yeah, exactly.
It's not-
It's just a subsidiary where its papers were essentially filed in Ireland.
Okay.
Here's the deal.
And I think that's one of the, if I can chime in real quick, I
Yeah.
think that's one of the reasons why Ireland allows this to happen, because there's no overhead cost to Ireland for that. It's just great. It's paper money. It's not like they're taking up the roads, going back and forth to work with big, construction work or anything like that. They're not using the infrastructure. So the incentive is there for Ireland to allow this to happen, because it's just, gravy on top. It's nothing that they're having to worry about running or anything. It's just all on paper.
See, the thing about Ireland too is there's no transfer fees. So all of global profits, they can run them back to Ireland without paying any fees. For example, if they run $190 billion back to the United States, that would be 40% of a transfer fee. That's like Tim Cook said, that's ridiculous. There's no way I'm paying 40% of taxes to move my money from Ireland to the United States.
So one of the questions you have on there is the EU overstepping their boundaries, and you made a comment that Ireland has its own tax laws. So I would say, if there's no EU tax code that says they need to be doing this a different way, then I would say that they are overstepping their boundaries. However, there are retail stores and things like that in the EU. I am assuming that they're paying some sort of tax. I mean, they're probably paying some sort of payroll tax. Maybe, I guess, not a tax on profits.
Right.
Is that?
I can actually answer that because so I don't know if you remember this, but in 2010 Ireland went through a really bad economic time. They had a really bad recession. They had to be bailed out. Their banks had to be bailed out. The government couldn't really foot the bill for the bailout, so they had to take money from the International Monetary Fund and from the EU themselves. So whenever you come into an agreement with the EU where they're giving you some sort of economic aid, they have the right to overlook at your tax laws. They cannot tell you what to do about them, but they do have the right to investigate. And this is one of the causes of why they're also investigating these things.
You had mentioned something about putting money in an escrow account and then having a tax rate in the US for that. Can you elaborate a little bit on that?
Well, there's another loophole in the US tax code and business tax code that's essentially said, well, I don't know the exact what formula is. Maybe Matt is a tax guy knows a little more about this than I do. But if they have to pay the taxes, if they put it in some account, they essentially paid it. Now they're going to kill it and maybe receive it. But since they paid it, it essentially comes off their bottom line, they can use that as a tax credit in the United States. So their cash amount is essentially dropped.
It's a deduction for income. So typically, taxation happens after you've taken all your current expenses for whatever period you're talking about. So by putting it in the escrow account, you can put it on the income statement for your books, and then it's therefore reducing your taxable amount for that current year. So it's
So
not.
even as a
So
like a pending transaction?
Yeah, just
it's
gone.
listed on,
Yeah.
yeah.
You have no access to it.
It's like putting it in as a prepaid expense. Kind of. I mean, but the IRS, I mean, it's 70,000 pages long, so it's, it's hard to explain it all at once, but that's generally the idea, is to reduce your taxable income
Yeah, because an
for
escrow
that
account
period.
is essentially just having a third party hold
And,
that.
yeah, it's sitting in the bank and drawing interest, so it's a win-win for them.
Sabian, you had a question?
And then
I'm sorry.
To go back to is the EU overstepping their boundaries. One of the reasons why they're making this such a focal issue, even though at the end of the day that they know they can't affect any consequence on them, you got to remember the European Union's 30 different countries, right? So it's all about getting the conversation going so that they can change the laws. Like they're trying to make Apple look like the bad guy so that they can change these laws so that other industries don't follow suit. It's just such a, it seems so egregious because they make so much money. So it's going to drive the voters to doing what they want to do, essentially, and that is essentially make an even playing field where, just one country's reduced tax rate wouldn't make everyone flock there. Like in the United States, it's Delaware. Every company that's in the United States is incorporated in Delaware pretty much because they're so friendly in that regard.
With regards to the EU overstepping boundaries, just sort of going a little bit off what you said just now, whether or not it's a violation of the laws governing the EU, it is, among other things, financial union. So it's definitely against the spirit of the laws because the point of the EU is greater financial and economic integration. Ireland does use the euro. The reason, part of the reason they're able to transfer money into Ireland from the rest of the EU so easily is because of the EU rules against tariffs between member countries. So it's definitely exploiting EU loopholes, which I would think gives the EU the right to investigate and potentially the right to put laws on the books that ban that kind of behavior in the future.
Yeah, let's jump on that. Another point, what Apple does too, is how they kind of fly under the radar is their cell phones sold essentially in another country. Anyway, in the EU. The reason why Apple doesn't pay tax in that country as to your own sales tax or employee tax when it's sold is Apple has intellectual property in Ireland. So all the patents are in ASI in Ireland. So therefore, only Apple knows the exact amount that the patents are, or the exact amount that intellectual tax is. They can essentially contribute 100%, 99.9% of that sales to Ireland through the patent or through using its intellectual property. So that's how they kind of fly under the radar. And nobody gets paid for royalties too.
One last question. Anybody have one more question?